Hello guys and welcome back to Inside Investing. So today we're discussing the Vanguard All World ETF, known under the ticker VWRL. This is an ETF brought out by Vanguard and it covers the whole world, as the title already says. This ETF, this tracker, is going to be one of the most important trackers within our portfolio. So today we're going to discuss with you how this ETF is made out of across the whole world, which companies are included, what's the current price ratio, etc. Let's go. So today we're discussing the VWRL Vanguard All World ETF. This ETF currently has a price around £80 and it includes around 3,400 different stocks. So there are around 3,400 different companies included in one ETF share. The ongoing charge is around 0.22%, which is fairly low. So this is the management fee, the costs that are included in the current market price to make sure that this ETF is available for the whole market. The risk is 5 out of the 7, where 1 is very low risk, a 7 is a very high risk. So this is perfectly somewhere around the middle, a little bit on the more higher risk side, but mainly because this one is spread around the whole globe. There are companies included throughout the whole globe. We see the risk of this share from our perspective to be a very good investment in your portfolio. So then we're going to have a look at the past performance. What can we see here? Well, we see that currently the NAV is around the benchmark, which means that the net asset value is very much according to the benchmark. For example, in 2016, we see that the NAV was around 7.98 with a benchmark of 8. We then see the year after it was a little bit higher than the benchmark, but overall what we see is that the stock is performing according to the benchmark, which is very good, right? So the benchmark is currently saying, well, we are expecting the share to perform around this rate of return, and the NAV, so the net asset value, is around that same percentage. So it's not performing way higher than the expectancy, but it's definitely also not performing below the expectancy. Then if we quickly look at the overall rate of return, we see that in most years it's very good, right? So in the last 5 years, we see a rate of return of around 8%, 24%, then a little bit of a dip to approximately minus 9%. Then we see again a positive in 2018 with around 26.5%, and then last year a 16% rate of return. So overall, we're very satisfied and very happy with the rate of return of the Vanguard All World ETF. Then we're going to have a look at the characteristics of the stock. And what we see here is that Vanguard has a little bit less stocks included in one share. So we see that currently there are around 3,461 different stocks, so different companies included in one share of VWRL. But if we then look at the benchmark, we see that that's around 39 and 60. So that's around 500 companies less included in the share itself in comparison with the benchmark. So from our side, that's the main con if we look at the characteristics, that there are less stocks included in one share of VWRL. If we then look at the rest of the characteristics, we see that the median market cap is around the same as the benchmark. We see the price per earnings ratio is around the same. We see that most of these other numbers are performing according to the benchmark. Thanks for watching the video. If you want to learn investing, subscribe to get more free investing and finance tips and tricks. We give you easy to follow, straightforward suggestions on how to start investing and improving your portfolio. Like the video if you learned something new today, and comment down below the topics for the next video. So then we're gonna have a look at the region exposure. And what we see here is the different regions across the world and what percentage they're included in the shares in the ETF of VWRL. And what we see here is that North America is around 58%. So this tracker is very much focusing on North America. If we then look at Europe, it's around 17%, the Pacific around 12%. Emerging markets are also included, so that's around 11%. And then we've got some other and Middle East as well. Overall, we're very happy with this. So we see that the region exposure is very much across the board, so across the globe. We see different markets included, a heavy focus on Northern America, but also a focus on Europe and the Pacific, as well as a little bit of emerging markets. That's from our end very good that that's also included. So markets that are currently upcoming are also included in ETF. Overall, we're very happy with the region exposure. One thing to note here, by the way, is that this is the as of date of 31st of December 2020. Okay, so then we're gonna have a look at the top 10 holding details. Here we see the companies that have the most percentage of the funds within this tracker. So what we see here is mainly that Apple, Microsoft, Amazon and Facebook are all included in one of the top percentage. So these companies are heavily included in this tracker. If we then look at the companies down below, we also see Tesla included, Alphabet, which is of course the mother company of Google. We then see the semiconductors of Taiwan, we see Tencent Holding and Johnson & Johnson. The one thing we're very happy to see is that Apple, which is one of the companies that has the highest percentage of included in the fund, we see that that is only around 3.58%. So even the biggest company has a very small percentage of the whole ETF tracker. Overall, what we're satisfied here with is that we see that it's a good combination of a lot of different companies across the whole world. And also we look here that we see that also the big performance of Microsoft, Amazon, Tesla of course, Google as well. We see those companies all included in the tracker. So we're very happy to see that. So if you also want to start investing, we currently use the Giro ourselves. We've got a link in the description to sign up. So if you're interested into starting your investment journey today, please use that link down in the description. Let's have a look at the price history of VWRL, which we've got out of the Giro. So here we see, I think this is around 2016, which was the lowest point of around 51 euros. This is euros per share, by the way. Then we see in 2017, 2018, we each time see a significant increase. We see then a dip in 2019. Then afterwards a very steady increase. I think this was just prior to the pandemic. So here we see that it was just below the 90 euros mark. Then it crashed significantly. So we see that the price dipped here at around 58 euros per share. But then we see during the rest of 2020 that the price continued to grow and actually currently is back at an all-time high of around 90 euros.71. So that's already higher than it was prior to the pandemic earlier in 2020. So we see that currently the share is performing very well. It's doing very good. If you bought in around 2016 at around 51 euros a share, it's currently around 90 euros a share. So that's getting to a 200% profit margin, which is of course very good. And then if you want to know how to steadily invest in such an ETF, which covers the whole world, as you also can see during a 5-year mark, how the price has increased, we're gonna have a look at compound interest, because compound interest is gonna give you the best value for money. So let's say in this case, you invest every month $100, starting at your age of 18 years old until you're around 55. So that's approximately 37 years long. You keep on investing $100 each month. At a 7% interest rate, that's going to result you at around $193,000. So eventually, after around 37 years, because of the compound interest, so because you keep on investing, there's a long period of time in between. So you get the 7% interest on the new value of your portfolio. You get a little bit more. You again invest $100 into your portfolio. You again getting 7% interest on that new value. You see that overall after 37 years, you're gonna make a significant amount of money just due to your compound interest that you're getting over this long period of time. The longer you can make these years, so the earlier you start, the better, of course, because you see that in these years, so after around 24 years, you see that the profit margins are increasing significantly, guys. So this is very important to start as soon as possible so that the value of your portfolio reaches the maximum amount of money. So guys, thanks for watching. We hope you learned something new today. Please subscribe down below if you haven't done already and give this video a thumbs up. Comment down below the topics for a new video so that we can incorporate your feedback back into the channel, back into the videos. We appreciate you tuning in today, and we covered the basics around the VWRL, which is the Vanguard All-World Tracker. We've got different ETFs that we're going to cover in future videos, so if you have any ETF that you want us to specifically cover during a video, let us down below in the comments. I will see you in the next one. Let's go.